Hi, welcome to my channel Management Accounting Made Easy. This is part 5 of standard costing and variance analysis. In this part 5, we are going to see material usage variance, material mix variance, and material yield variance. So material mix variance and material yield variances are the subdivision of material usage variance. So we are going to cover all these. Material mix variance. Material mix variance occur when the actual mix or actual proportion of materials is different from the standard mix or standard proportion. If a company uses more proportion of cheap materials compared to the proportion of expensive materials, then there will be a favorable material mix variance. On the other hand, if they use more proportion of expensive materials compared to the proportion of cheaper materials, then there will be an adverse material mix variance. One key thing here, when you analyze the mix variance, you must remember the key word is either the mix or proportion. In an exam question, if you say, for example, the company has used more cheaper materials than the expensive materials, your analysis for the material mix variance will get no marks, as this explanation is related to the usage variance. Now, material mix variance helps us to identify the effect on profit by changing the mix or proportion of materials. So remember, the key word here is the mix or proportion when you analyze the material mix variance. Reasons for the mix variance. If there is a general price changes in the market, sometimes companies are encouraged to use more proportion of expensive materials because the actual price of the expensive material is cheaper than the standard price of the expensive materials. So managers in this case might use more proportion of the expensive materials. The second possible reason, the availability of the materials in the market. Depending on the availability or supply of the materials, managers have to use either cheap or expensive ones. Managers may not be able to find enough of the cheaper materials. Then obviously they have to use more of the expensive materials proportion. Availability of substitutes, i.e., the possibility of substituting one material for another. In this case, managers can either use more proportion of cheaper materials instead of the proportion of expensive materials. In these cases, if there is an availability of substitutes, it would be appropriate to monitor the manager's performance based on the mix variance, as there is a possibility that managers can change the mix of materials. But managers are only accountable for the mix variance only if they have the control for the mix. Then in this case, it would be appropriate to use the mix variance to analyze or to monitor the manager's performance. Material mix variance explanation continues here. We'll see the factors to be considered. If cheap quality mix is used, then the companies can charge lower prices compared to their competitors. But if they use cheap materials, then they may have to face internal failure costs. Internal failure cost means errors found before the customer finds it. So within the company, when they do the quality checks, they find the mistake. So the costs include reworking, scrapping, etc. And external failure cost. This is the dangerous cost because the customer finds the mistakes. So the costs include the cost of replacement, loss of goodwill, etc. Also, cheaper materials will affect the labor efficiency and variable overheads. Increased wastages will increase the variable overhead cost and will affect the labor efficiency as employees will be spending more time on reworking. These might affect the employee morale because they might lose their bonuses, promotion, etc. Companies use the best possible mix of materials to increase the output or the yield without affecting the quality of their products in order to make profits. The yield variance calculates the number of units produced from the given input compared to the standard output expected from the same input. If the actual output from the given input is greater than the expected or standard output, then there will be a favorable yield variance. On the other hand, if the actual output from the given input is lower than the expected or standard output, then there will be an adverse yield variance. We'll see the possible reasons for a favorable yield variance. Good quality material mix is used, or managers paid good attention to production facilities, or the company has used efficient labor or experienced workers. In addition to that, they might have used new advanced machineries. On the other hand, we'll see the possible reasons for an adverse yield variance. Lower quality material mix is used. Carelessness and lack of attention from the managers involved. Inefficient labor or inexperienced workers, they end up using more materials, more wastage, or old machineries. Now we are going to see the interrelationship between these variances. As discussed before, if a company uses lower quality material mix, they might get favorable mix variance, but due to lower quality material mix, there will be an adverse material yield variance, adverse labor efficiency variance, and also adverse sales volume variance. Because the company has used lower quality materials, they ended up producing lower quality products. There will be an increased customer returns and loss of goodwill. These might affect the profitability and the long-term prospect of the company. The opposite might happen if they use good quality material mix. Then they might end up getting an adverse mix variance, favorable yield variance, favorable sales volume variance, and happy customers. We are going to see how to calculate the usage variance, mix variance, and the yield variance. The usage variance is not a stranger to us, as we have seen in part 2 of our standard costing and variance analysis, but we'll see here as well. Now the question, the Quality Burger Company. The Quality Burger Company produces burgers to a very high standard. So they have given the standard cost card for one batch of burgers. So the meat, cheese, ground spices, onion. Now, the budgeted production and sales for the month of December, 150,000 batches. But the actual production, 175,000 batches. And they have given the actual data. The quantity of meat they have used, cheese, ground spices, and onion they have used. Now we need to calculate the material usage, mix, and yield variance for the month of December. We know material mix and yield variances are the subdivision of material usage variance. So, as usual, we can cross-check our workings. We are going to calculate the material usage variance for our example, the Quality Burger Company. Budgeted data for a batch, meat 2.5 kilogram at $22 per kilogram. Cheese 1.2 kilogram at $3.25 per kilogram. Ground spice 0.4 kilogram per batch at $2.75 per kilogram. Onions 0.75 kilogram at $3 per kilogram. And the actual data given, actual production and sales 175,000 batches. So also they have given the quantity of meat, cheese, ground spice, and onion used. Now, as I mentioned before, material usage variance calculation is not a stranger to us, as we have seen this in part 2 of our standard costing and variance analysis. Only thing is, I have done the presentation in a horizontal way because we have 4 different materials. Okay, in order to save time in the exam, instead of writing the standard usage, actual usage, these ones every time for each material. So if we do it in a horizontal way, we can save time. First of all, we'll see the usage variance, how to calculate the usage variance. We need to see the standard usage. Standard usage will tell us how much we should have used. And then we are going to compare the standard usage with the actual usage. So when you compare the standard usage with the actual usage, you will get the usage variance in kilograms. As we know, the management wants to know the usage variance in money value. So always, we need to times that by the standard price per kilogram, because standard price is the price set by the management. So always when you convert anything into money value, you must use the standard price. So here we are going to use the standard price per kilogram. So if you times the usage variance in kilograms by the standard price per kilogram, you will get the usage variance. So first we'll see the meat. We have produced 175,000 batches. So each batch, the standard says you have to use 2.5 kgs. So 175,000 batches times 2.5 kg per batch, the standard usage is 437,500. But the actual usage is 438,850. So we used more, so it's an adverse variance. So the difference is 1,350 kilograms adverse. Now the standard price per kilogram is $22. So the usage variance in dollars is $29,700 adverse. Now, before looking at my workings, you can try the usage variance for cheese. Okay. So we'll see. Cheese. We have produced 175,000 batches. So according to the question, each batch you should use 1.2 kilograms. So 175,000 times 1.2, your standard usage is 210,000 kilograms. But the actual usage is 195,800 kilograms. So the difference is 14,200 kilograms favorable. So we need to convert that into money value. So we need to times that by standard price per kilogram, which is $3.25. So the usage variance for the cheese is $46,150 favorable. Now we'll see the ground spice. Again, 175,000 times 0.4, because the question says each batch of burger you produce, you are supposed to use 0.4 kilograms. So here we used 175,000 batches. So 175,000 times 0.4, 70,000 kilogram is the standard usage. But the actual usage is 72,200 kilograms. So we used 2,200 kilograms more. So 2,200 kilograms adverse usage variance in kilograms. Now we need to convert that into money value. So we need to times that by $2.75. That's our standard price per kilogram. So the usage variance in dollars is $6,050 adverse. Now we'll see the final material usage variance for the onions. We have produced 175,000 batches. According to the standard, each batch you produce, you should use 0.75 kilograms of onions. So 175,000 batches times 0.75, your standard usage should be 131,250 kilograms. But the actual usage is 132,200 kilograms. So we used 950 kilograms of onions more. So the usage variance in kilograms is 950 adverse. We need to convert that into money value. So we need to times the onions price, standard price per kilogram is $3. So 950 kilograms times $3. So the usage variance in money value for onions is $2,850 adverse. So our total material usage variance, if we add all these variances in money value, we will get $7,550 adverse. So our material usage variance is $7,550 adverse. We are going to see how to calculate the material mix variance for our example, the Quality Burger Company. We'll have a quick look at the question. They have given the budgeted data per batch, also the actual data for the production and sales, which is 175,000 batches, and also the actual quantity of material used. For any variance analysis calculation, we have to compare the standard with the actual. So here as well, we need to compare the standard mix with the actual mix. So first we need to calculate the standard mix, then the actual mix, which is given in the question. Then we are going to compare the standard mix with the actual mix. Then we get the mix variance in kilograms. Then we know we need to convert that kilograms into dollars. So we know standard price per kilogram. Then mix variance in kilograms times by the standard price per kilogram. Then we get the mix variance in dollars. So we are going to see for the meat. According to the standard, out of every 4.85 kilograms of total ingredients used, 2.5 kilograms should be the meat. So we'll see where did we get that 4.85 from. So if you look at the budgeted data per batch, meat is 2.5 kilograms, plus the cheese 1.2 kilograms, and ground spice 0.4 kilograms, and finally the onions 0.75 kilograms. So if we add all those together, we will get 4.85 kilograms. So that is the total kilograms per batch. So out of 4.85 kilograms, we need to use 2.5 kilograms of meat. Now, if you look at the actual total ingredients we used, meat 438,850 kilograms, cheese 195,800 kilograms, ground spice 72,200 kilograms, and onions 132,200 kilograms. So if we add all those together, we will get 839,050 kilograms. So I'll repeat it again. According to the standard, if we use 4.85 kilograms of total ingredients, out of that 2.5 kilograms should be the meat. But we have used 839,050 kilograms of total ingredients. So if we calculate the standard mix for meat, which is 2.5 divided by 4.85, times it by 839,050 kilograms, we will get 432,500. So this is how much should have been the standard mix. But the actual mix, the question says 438,850. So the difference is 6,350 adverse because we have used more meat. Now we need to convert that into money value. So the standard price per meat is $22. So 6,350 times 22. The mix variance in dollars for meat is $139,700 adverse. So we are going to do the mix variance calculation for the rest of the ingredients. So we'll see cheese. Cheese, we should have used 1.2 kilograms out of the 4.85 kilograms. So 1.2 divided by 4.85 times it by the total ingredients we have used, which is 839,050 kilograms. So standard mix for cheese is 207,600. The question has given the actual mix, which is 195,800. So here we used less cheese. So we have 11,800 favorable mix variance in kilogram. We need to convert that into money value. So we are going to times that by $3.25. That is the standard price of cheese. So the mix variance will be 38,350 favorable. Now we are going to see the ground spice. 0.4 per batch. So 0.4 divided by the total ingredients per batch, which is 4.85, times it by the actual total ingredients we have used, which is 839,050. So the standard mix for ground spice should have been 69,200. Instead, we have actually used more, which is 72,200 kilograms. So if we get the difference, which is 3,000 kilograms, adverse. And we need to convert that into money value. So the standard price per kilogram for ground spice is 2.75. So 3,000 times 2.75 is $8,250 adverse. And finally, we are going to see it for the onions. Onions, according to the standard per batch, we should use 0.75 kilograms. So 0.75 kilograms divided by 4.85, that's the total standard mix for the ingredients, times it by 839,050 kilograms. So we will get 129,750. So according to the standard, we should have used 129,750 kilograms of onions. But we have actually used 132,200 kilograms. So we have used 2,450 kilograms more, so 2,450 adverse variance. As usual, we need to times that by the standard price per kilogram, which is $3. So the mix variance for the onions is $7,350 adverse. So we'll calculate the total variance, which is 116,950 adverse. So if you add all those mix variance in money value, we will get the total mix variance of 116,950 adverse. Now, another point I would like to explain. I've seen exam questions, especially the multiple choice questions, asking why the mix variance total in kilograms is 0. Can you see the mix variance in kilograms, the total is 0? Of course it will be 0, because if you look at the standard mix total, which is 839,050, actual mix total is 839,050, because we have apportioned the total actual mix of 839.50 into the standard proportions. So that's why the standard mix of 839,050 and the total actual mix of 839,050 the same. So when you take away one from the other, your mix variance in kilograms will be 0. So we will get the mix variance only when we times that by the money value. So we will get the mix variance in money value. As we have seen before, yield variance helps us to find out whether we have produced the number of batches according to the standard or not. There are two methods. We are going to see both methods. and then you can pick whichever method you like. So method 1 is called the total method. So we'll see the question, the budgeted data per batch given, and the actual data given. So in this example, the total material input is 839,050 kilograms. We know the actual data for the meat, cheese, ground spice, and onions. If we add them together, we will get 839,050 kilograms. So the material yield variance helps us to find out for this 839,050 kilograms of input, according to the standard, how many batches of burgers we should have produced and how many did we actually produce. So first we'll calculate the standard yield, that is the number of batches we should have produced. Okay. According to the budgeted data per batch, every 4.85 kilograms of total ingredients, we should have produced one batch. But we have inputted 839,050 kilograms. So 839,050 divided by 4.85, we should have produced 173,000 batches of burgers. But instead, we have actually produced 175,000 batches. So the yield variance is 2,000 batches favorable. But as we know, we need to convert that into money value. So here, we need to calculate the standard cost per batch. So if you see the meat, which is 2.5 kilograms times 22, which is $55, plus the cheese, which is 1.2 kilograms times 3.25, which is $3.9. Same way, the ground spice is 0.4 kilograms times $2.75 per kilogram, so we will get $1.1. And finally, the onions, which is 0.75 kilograms times the $3 per kilogram, we will get $2.25. So we are going to add all those together and we will get $62.25. That is going to be our standard cost per batch. So the yield variance in money value will be 2,000 favorable batches times it by the standard cost per batch, which is $62.25. So the material yield variance is 2,000 times 62.25, which is $124,500 favorable. Here we are going to see how to calculate the material yield variance using method 2. This method 2 is called the individual method. Here we are going to calculate the yield variances individually for each ingredient. So if you look at the data quickly, they have given the budgeted data and the actual one. Now, first we need to take the standard usage from our usage variance. So the standard usage from the usage variance, standard mix from the mix variance. So you compare the standard usage from the usage variance and the standard mix from the mix variance, and you will get the yield variance in kilograms. As we know, we need to convert that into money value, so we need to times that by the standard price per kilogram, and we will get the yield variance in money value. So we'll see individually. Materials. We know how to calculate the standard usage. I'll quickly repeat it. We have produced 175,000 batches. So each batch we should be using 2.5 kgs of meat. So 175,000 times 2.5. This is 437,500. As I have mentioned, you can get these figures from your usage variance calculations. Now we'll go to the standard mix from the mix variance. When we were calculating the mix variance, we said in total the company has used 839,050 kilograms of materials. According to the standard, every 4.85 total material used, they should be using 2.5 kilograms of meat. So 2.5 divided by 4.85, that is times it by 839,050. So you will be getting 432,500. So if you have problems, please refer my mix variance calculation. Under that, we have done the standard mix of actual quantity in detail. So when you compare these differences, you will get 5,000 favorable. Then the standard price per kilogram is $22. So the yield variance is $110,000 favorable. If you look at the cheese, again, the standard usage, you can get it from the usage variance, 210,000 kgs. The standard mix of actual quantity, as we mentioned, we can get it from the mix variance calculation. So the difference is 2,400 kgs favorable, times it by 3.25, you get $7,800 favorable. Same way, we are going to do it for the ground spice. The standard usage from the usage variance, 70,000 kgs. Standard mix of actual quantity from our mix variance, which is 69,200. So the difference is 800 kgs favorable. Then we are going to times this by $2.75 per kg. So the yield variance is $2,200 favorable. Now we'll look at the onion. The standard usage from our usage variance is 131,250. Standard mix of actual quantity from our mix variance, which is 129,750. So the yield variance in kilograms is 1,500 kilograms favorable, times it by standard price per kilogram, which is $3. So the yield variance is $4,500 favorable for the onion. So if we get the total of all that, material yield variance is $124,500 favorable. So whichever method you follow, you should get the same total final answer. So here, which is 124,500. We're going to compare both methods 1 and 2 for the material yield variance calculation. Before we compare those yield variance methods, we'll cross-check our workings. We have calculated our mix variance, a total of $116,950 adverse, plus the yield variance, which is 124,500 favorable. If we add them together, we should get a usage variance of 7,550 favorable. So we got the calculations right, because our usage variance is $7,550 favorable. Now, we'll compare these two methods. I personally prefer method 1 because for me, this method is more logical. But one thing you must be very careful with this method when you calculate the standard cost per batch or per unit. In this example, if you look at the budgeted data of the question says budgeted data per batch. So I have highlighted the per batch. That's why we have simply added the meat cost of 55 plus the cheese of $3.90 plus the ground spice of $110 plus the onion $225, and we got $62.25. Okay, but for example, if the question says the budgeted data for 15 batches, here the question said the budgeted data per batch. But for example, if the question says the budgeted data for 15 batches, then to calculate the standard cost per batch, obviously you have to divide that $62.25 by that 15 to calculate the standard cost per batch. So this is the only thing you got to be very careful with this method 1, which is the total method. And one good thing about this method 1 is it is quicker to calculate, especially for a multiple choice question. It's really quick to calculate. So if you look at method 2, this is a lengthy method. This is a very lengthy method. But only thing is, you got to take the data from the standard usage from your usage variance calculation and your standard mix of actual quantity from your mix variance calculations. So you can pick those two data, and then you need to times those by the standard price per kilogram. Okay, so this method takes a long time, especially for a multiple choice question. Sometimes there will be a loss of input due to evaporation or wastage, etc. So in these situations, we'll see how to calculate the material variances. So here we are going to see the same example, the Quality Burger Company, with a slight change. So if you look at the standard cost card for one batch of burger, so the same meat, cheese, ground spice, and onion, the actual production, so the changes I have highlighted in red. So the actual production and sales were 156,000 batches. And also there is a standard loss of 12% is expected. So the actual data is given. So we need to calculate the material usage, mix, and yield variances. So if you look at the standard loss, say if you're inputting 100 kgs of material, only 88 kgs you will get it because there will be a loss of 12%. So bearing this in mind, we look at this question. So we look at this question with a standard loss of 12%. How to calculate the usage variance. So the budgeted data is the same as before. And the actual data, there is a slight change. The actual production and sales, 156,000 batches. But we have to note there is a standard loss of 12% is expected. Okay, but the usage variance calculation is the normal way. We have to compare the standard usage with the actual usage, and we will get the usage variance in kilograms, and we have to times that by standard price per kilogram in order to get the usage variance in dollars. Now, we'll see. The meat. We have produced 156,000 batches. So each batch we need 2.5 kgs of material. So if we put 156,000 times 2.5, your standard usage will be a wrong figure because you haven't taken that 12% loss expected. So what we have to do is 156,000 times 2.5. This is equal to 88% because if you input 156,000 times 2.5 kgs of meat, out of that meat, 12% will go as waste. So this 156,000 times 2.5 is equal to 88%. So how much is 100%, which is 156,000 times 2.5 divided by 88%. So you will get 443,182 kilograms. So you have to be very careful to divide your standard usage by 88% here. Then the actual usage is given in the question, which is 438,850. So the usage in kilograms, the usage variance in kilograms is 4,332 kilograms favorable. Then we times it by $22 and we get the usage variance of $95,304 favorable. Except the standard usage calculation, the rest is our usual usage variance calculation. So the cheese, same way, 156,000 batches, times it by 1.2 kgs, divided by 0.88 or 88%, you will get 212,727 kilograms, but we have actually used 195,800 kilograms. So there is a favorable variance of 16,927 kilograms. Then we times it by 3.25, so we will get $55,012.75 favorable. We're going to do the ground spice, 156,000 times 0.4 divided by 0.88 or 88%. You will get 70,909 kilograms. The actual usage is 72,200. So the usage variance in kilograms is 1,291 kilograms adverse. And you are going to times that by $2.75. So the usage variance for the ground spice is $3,550.25 adverse. We'll do the same for the onions. 156,000 times 0.75 divided by 0.88. So that will get 132,955 kilograms. That's our standard usage. The actual usage is 132,200. So the usage variance is 755 kilograms favorable, times it by standard price per kilogram of $3. So the usage variance in dollars for onions is $2,265 favorable. So the total material usage variance is $149,031.50 favorable. So I'll quickly repeat this one here. The only difference is to calculate the standard usage. So we got to bear in mind the loss. So that's why we have divided everything by the 88%. Say, for example, if the question says 10% is expected, then you got to divide it by 0.9 or 90%. So for this example with a 12% loss, we will see the material yield variance calculation using the method 1, which is the total method. So the budgeted data given, the actual data, the changes are there are only 156,000 batches and there is a loss of 12% is expected. Now, as usual, we need to compare the standard yield with the actual yield. So in total, we have actually used 839,050 kilograms worth of ingredients. According to the standard, each 4.85 kilograms, you should be getting one batch. So 839,050 divided by 4.85. But we got to remember there is a 12% loss. So out of this, we will get only 88% because 12% will go as waste. So 839,050 divided by 4.85 times it by 88%, we will get 152,240 batches. But the actual yield is 156,000 units or batches. So we have produced 3,760 batches more. So it's 3,760 batches favorable. Now, we'll see these standard cost per batch. Now, we got to bear the loss in mind. So this $62.25 of the standard cost per batch is for 88%. Therefore, for the 100% is 62.25 divided by 0.88. So please note the loss has been taken into consideration for the standard cost per unit, because here we are saying the standard cost per unit. So that 62.25 is not per batch or per unit. It's only for 88% of the batch. So we need to divide that by 0.88 to calculate the standard cost per batch. So you will get $70.74. So the material yield variance here is $265,782.40 favorable. So if you times 3,760 batches times $70.74, you will get $265,982.40 favorable. Now as usual, we'll cross-check with our variances. But before I cross-check, the mix variance will not change. Mix variance is going to stay the same. So fortunately, we don't need to calculate the mix variance because we have already calculated the mix variance. Because when there is a loss of output, so that will only affect the yield variance. So if we cross-check our workings, our yield variance is $265,982.40 favorable, plus our mix variance, which we have calculated before, $116,950 adverse. If you add them together, you will get $149,032.40 favorable. There is a difference of 90 cents, which is due to the rounding up error. So our calculation is perfect. So we are going to see the material yield variance calculation using our method 2, the individual method. Some of you might prefer the individual method. So the budgeted data and the actual data given. As we have seen before, we have to take the standard usage from our usage variance calculation and then standard mix from our mix variance calculation, and then we need to compare both to get the yield variance in kilograms. then we need to times that by standard price per kilogram in order to get the yield variance in dollars. So for the meat, I have got 443,182 from the standard usage, but you got to bear this in mind. You have to divide this by 88%. So this 2.5 kilograms times 156,000 divided by 0.88. So you will get 443,182, and your standard mix of actual quantity from the mix variance is 432,500. So the difference is 10,682 kilograms. So times it by $22 per kilogram, you get $235,004 favorable. If you do the same for cheese, you will get $16,662.75 favorable, and for the ground spice, $4,699.75 favorable. And so as the onions, we will get $9,615 favorable. So the material yield variance is $265,981.50. There might be a slight rounding up difference, which is fine. So again, if you cross-check both, your yield variance plus your mix variance must be equal to your usage variance. Thank you for watching. Hope you have enjoyed these material mix and yield variance analysis. In order to master these mix and yield variance analysis, you need to practice as many questions as you can.